we had some mild recovery, but in the context of global economic activity, we're still much below the level of 2007. And also asset markets, they haven't recovered to the 2007 peak. In other words, the S&P is still down substantially from the highs, and also your stock market is still substantially down from the highs, although it's gone up substantially from the lows reached last March.
But don't you think the recovery we've seen so far since March last year is solid?
I don't think it's solid. I think that we have unprecedented government stimulus, with monetary policies keeping interest rates at essentially zero, and at the same time we have these huge fiscal deficits around the world that have stabilized the economy. But the problem is that with the fiscal deficits, the government debt increases, and one day in future, governments will have difficulties in paying off their debts or paying the interest on the debts. This is particularly true of countries like the United States, the United Kingdom, Ireland, Greece, and so forth. So I think we've postponed essentially the crisis, and maybe the global economy can stabilize and even grow somewhat. But down the road, we'll have probably even larger problems.
Do you believe in the phenomenon of a sovereign debt crisis, as it's called?
Well, my view is we have to distinguish the financial position of emerging economies, whether it's Brazil or China or India, is relatively good because they have large foreign exchange reserves and they don't have the unfunded liabilities that arise out of future social security payments or health care payments in the United States, in particular Medicare and Medicaid. So in general, I would say the emerging economies are in reasonably good shape. Also the consumer in emerging economies, he hardly has any debt because, say, in Vietnam, only 8% of the people have a bank account. So they have no mortgage debt. They don't have any consumer debt. So those people are in a relatively good position. The problem is this time around that the developed world, the United States, Japan, and Western Europe, has a huge debt overhang, with some countries worse off than others.
How far you think governments should go in stimulating the economy?
I think the best stimulus would be to cut every government in half, fire 50% of government employees, and then cut taxation. That is the best stimulus you can offer to
Some economists say governments should spend their way out of the crisis.
Yes, these are precisely the economies that led to the crisis that we have at the present time, because they didn't pay any attention to credit growth and the excessive leverage in the system. I'm very well aware of these economies.
Which governments do you consider in immediate danger?
Well, I think the UK government and the US governments are in immediate, well, not immediate, because the US does not have to default. They can just print. In other words, when the problem will arise to roll over the government debt, they can monetize it and just issue more paper. So they will not default in that sense. But you have to be aware, a default can also occur if, let's say, I lend you money, and in 10 years' time you pay me back with money that has lost its value. Then I have a loss because of the loss of the purchasing power of money, and that is precisely what happens in high inflation economies. The governments will pay the interest on the debt, and they even pay back the outstanding debt through a Ponzi scheme by issuing more debt and by printing money. And in the meantime, the purchasing power of money goes down. In other words, with the same quantity of money, you buy less and less goods.
So you say, buy what? Lands?
Well, I mean, depends. You know,
real estate?
There's some real estate. In Asia, I think that real estate is reasonably attractive because we have favorable demographics. And we have a low level of urbanization. In India, urbanization is just 30%. In other words, 700 million Indians, they live in the countryside. Over time, they come to the cities. So real estate markets will be quite buoyant, in my opinion. Then we also have an unorganized retail market in India. You know, it's 95% of Indian retail sales occur in mom-and-pop shops, not in organized Walmarts of this world or Carrefours and so forth. So that will also lead to more and more concentration and opportunities in retail space. And then we have, of course, the whole infrastructure that has to be built in Asia. Some countries have advanced more, like China, than others, such as India. But you need more airports, you need more roads, you need more train stations and so forth. So there are tremendous real estate opportunities, in my opinion.
But we all remember what happened in Dubai.
Yes. every country has from time to time real estate crisis because prices went up too much. I would say that in the UK and the US we have probably a worse situation than in Dubai. Because in an emerging economy like Dubai or in China and so forth, eventually the space gets filled. Whereas in a mature economy, there are some just essentially projects, they will never make any money and they never made any sense. But in general, in the environment I foresee, where paper money continues to lose money, and at the present time you get zero interest rates on your bank deposits. I don't know how it is in Holland. If you have a 1 year's deposit with the bank, how much interest do you get?
At the moment, I don't know, about 5%? No, not even that.
Not 5% for sure. Then you pay on top of that probably 50% tax. Nobody can retire on cash deposits, and that's what the central banks are trying to do, to force people to do something with the money, either to invest or to spend it. And my view would be that here in Holland, real estate, especially agricultural land, is quite desirable. Now, I don't know about the tax implications and so forth, but I would say you're probably better off in real estate than in cash, but I wouldn't leverage it 90% with debt.
Looking at the markets, what do you suggest? Where should we go with our money?
Well, if interest rates like in the US are at zero, basically it's difficult to value assets. I don't think that stock markets are that cheap anymore. They were very cheap last March and they provided a lifetime buying opportunity. In the meantime, they've gone up a lot. But say in Asia, where we have relatively favorable fundamentals, I still find a lot of companies that have a dividend yield of, say, 5%. So compared to zero interest rates, I think 5% is actually quite desirable. I'm not saying that these stocks will all go up, they'll fluctuate. But say in the long run, my view is that Mr. Bernanke, and also supported by other economists in academia in the United States, their view is to keep interest rates at zero for a very long time. Now, they may not be zero in nominal terms, they could be 5%, but if inflation by then is 10%, then in real terms they'll be negative by 5%. So I believe for the next 10 years, cash is not a desirable asset and government bonds are not a desirable asset. You should avoid them, but they can be attractive for, say, 3 months or 6 months. But in the long run, you should be in precious metals, in selected commodities, because they don't move all at the same time. The price of orange juice has nothing at all to do with the price of wheat and the price of coffee and the price of copper. So each commodity will move at a different time. Agricultural commodities are now inexpensive. And I would essentially advise individuals to have at least 50% of their money. And I'm not saying this to be done tomorrow morning, but over time they should have 50% of their money in emerging economies.
Which ones? Because China, India, it's a big difference.
Yes, but I think in every emerging economy, you have some very interesting companies that can gain market share, that are well managed, that have excess cash flow, it's free cash flow. So I think that you have to be also very selective in what you will buy in these emerging economies.
How do you know all this? Where do you get your information?
Well, I read a lot and I get sources from specialists, Chinese specialists, India. Then I sit on the board of China investment fund, of several India investment funds, of Vietnamese investment funds. And I travel, and I'm 64, so I think I've had plenty of time to read over the last 40 years.
Are you a happy person?
Yes, very happy. Why?
They call you Dr. Doom. That's not a very nice name.
Look, in our business, it's always the same story. You go to a portfolio manager. He will never tell you to sell shares because it's his business to look after a portfolio for you. You go to the Indian fund manager. He will never be negative about India. The real estate fund manager, he will never tell you to get out of real estate because that's his business. So occasionally, as an independent, I had negative views because, look, markets, they fluctuate. They go up and then they become too expensive. Then they go down and become overly inexpensive. So when you see the overvaluations, occasionally I said to get out, like out of before the crash in '87 or before the Japanese stock market bubble burst in 1990 or before the NASDAQ bubble burst in 1999, 2000 and so forth. But at the same time, I had many buy recommendations on emerging economies, on Latin America in the late '80s, Russia. I started one of the first Russian funds, Firebird, in 1993. And on commodities, we were very early in 99 to 2001. So, I mean, I don't think that I'm a negative person, and I ride motorcycles in Thailand, and you have to be an optimist to ride fast motorcycles in Thailand, I can assure you that.
Or tired of your life, maybe.
Yeah, maybe I'm suicidal, yes.
But then you have your internet...
I'm even married. You also have to be an optimist to be married in life.
Probably, yes. You also have this internet newsletter, your website, it's called the Gloom, Boom and Doom
Yes,
report.
Gloom, Boom and Doom report. Yes.
Well, that's not very optimistic, is it?
No, but there is a boom in the sentence. Gloom, boom and doom.